as far as your services that stands out and fits well in with the fund business, but I'm curious kind of how it came to be, and you already mentioned it, but this 1031 exchange platform. So it seems very easy to use. It's marketed very well on the website as well. But can you kind of give an overview of, like, I guess, why do you guys rolled it out? Does it also feed into the fund business for you as well? But I think
it's my favorite.
It's a really neat
product.
It's
my favorite capital at the moment because, and I say that intentionally because you're really dealing with families and you are really helping them reorganize based on where they are. So I saw we had always been doing our own 1031 exchange, so we were very familiar with it. What's offered in the marketplace, in the securitized marketplace, is a product called the DST, the Delaware Statutory Trust. But it's not really in alignment, in our view, with long-term ownership. There's restrictions on it. Can't really buy value add because the structure itself doesn't really enable you to reposition assets, spend money, lease things up, add financing, do all the things that are traditional real estate ownership things for like a buy and hold player. So it's more transactional, it's more Wall Street oriented. I saw an opportunity to customize these larger exchanges. So we have essentially like a $1 million minimum policy, but we're dealing with people like literally from $1 million to $50 million in one transactional amount, meaning they're selling a building, selling a collection of assets. And what we offer is essentially a replicate of what we did with our own internal capital, primarily Francis, Bob, others, partners, et cetera, where we would sell something and reposition it. So we would go into a deal all cash that had no debt on it. We'd then do an exchange. We'd then put financing on it, turn the capital back on a tax-free basis, reposition it, diversify it. Wow. And so it was a very successful mechanism of how this company became
for these guys
so substantial. This firm really, Francis would always admit he's never a good seller. Meaning, one of the, it's
he doesn't like to sell. It doesn't seem either.
It's just not his. I think partly he would always say he just would want to see things to the end, and he felt there was more value at the end of the line. And if he didn't need to sell something, he didn't really understand why we should be selling it. It wasn't really in the benefit of time. It wasn't really in the best interest of like long-term value. He's an owner. I think it's like a equity owner. And so what I saw in the channel that we were operating in after we put a couple of funds together was all these financial advisors that have clients that didn't really have an answer for a lot of these larger families, didn't really want a Wall Street product. They needed someone to reorganize them, to diversify them. And so we came up with a customized strategy for 1031. And what I love about it is you can deal with a family or a patriarch that wants to step out, that wants his children to take, to have the benefits of his real estate success or otherwise, but maybe they're not in the business or they have no expertise in that way because they're doing other things in their life. So there's a whole range of reasons that occur where, someone in the family was real estate. It could have just been that it was owned for a long period of time. And then they need to sell it. And you have a whole bunch of family members that are relying on it, or partners are splitting. There's a whole reason. And so I saw a great opportunity for us to position ourselves as like a custom player. And so far it's been great. We got a unique structure. We're very creative. People see us as creative. I think when people talk to me, I like to think that they know I'm really thinking about how to give them a series of different flexible options. And if you think about it, all I was doing was really applying who we are as a company and being agile to a marketplace. And like, that was my takeaway. I mean, the number one thing I think about that I really am I should say grateful that I'm here in this environment is that I'm an independent thinker and I'm able to have the freedom to think independently. And so this was just a product dynamic where I saw something I thought we could provide value to people. And little by little, we get out there and people start hearing, well, wait a second, Time Equities is offering 1031 exchanges. And of course, there's an unbelievable demand for that from the advisor point of view, particularly as things ran up on pricing because people were trying to take advantage of
getting out, but needing to put their money somewhere.
So, the market slowed down a little bit, but now it's actually picking up back again, because people are getting a little bit more comfortable, and maybe their sale was already in motion. So there's a series of things going on.
Fascinating. So without going wildly too in depth here, so there's a they're getting a preferred return, 5 to 7, I think somewhere the website says. But are they picking from a series of assets that you guys already own that you said you're in cash on?
So
a
lot of it's timing. There's a lot of rules centered around the 1031 exchange timing. If someone's they sell a property from when the day they sell, it goes into escrow, and then they can't touch it, has to stay in the escrow, and then they have 45 days from the date they sold to actually designate where they're going to go, and then within 180 days from when they sold, they have to actually close on that property. So timing becomes a large feature of the importance of what happens here. Typically what happens with us is we keep a very organized chart of who's where and where they are in their process. And it's not changing what we're looking at. It's just I'm like a matchmaker.
Yeah.
I'm literally looking at the deal sheets of what we might have and seeing what
the investors'
the timing demand is. And of late, and I think this just speaks to sort of the importance of sort of this department, my team, and frankly, I think the future of this company, if you think about capital, it's fuel. And,
that's a good segue.
Because we wanted to be able to have a channel to distribute so that people could live well beyond, we're at the 50+ year mark for this company. When you get to 50 years, JP Morgan was a 50-year company at one point, at some point in history.
Yeah.
So you start looking at 100, meaning, and I think, the hope is that, and I think we'll realize it, that this firm will live well beyond its founder years, and that it'll provide a place for people to continue their careers, build their network, expand, but also where the acquisition folks have adequate third-party capital at the right time. So it's a tremendously important feature for this firm going forward. And so there's a lot of collaboration now between the acquisition teams and my team, and it's one of the reasons why I sit on the executive committee, obviously, and try and lead people, because now it's become a lot more strategy. Like, it's knowing the pulse of where the investors are, what their timing is on the exchanges, et cetera. So it could just be that we're offering them something that we're working on, and it works within their timing.
Fascinating.
But we bring a creative element to it. And because we have strength and capacity as a financial player, we can take some of the timing out of it. I mean, we can hold a reservation, close with our own capital or capital that we arrange for, and then offer it to an investor post-closing. So we're not necessarily reliant on investors to close transactions.
Because you guys can do
that creates a whole nother advantage for us to be able to offer product to people.